Hey guys, welcome back to the channel. This is Hamza with Trading Secrets. Guys, I've been trading for the last 2 decades. Stocks, crypto, real estate, general merchandise, you name it, I've done it. Guys, on this channel, I'm trying to share my experience, my journey with you all and what I've learned throughout my journey. This is a no-nonsense channel. You're just going to get what you're going to see. No clickbait, nada, right? So without any delays, let's get to the point. Guys, today we're going to talk about market context and why it's very important. Even if you're a short-term trader, long-term trader, doesn't matter. You have to understand the market context. Now, the question is, what is market context? All right. So market context is basically the overall environment, such as the dominant trends, the key levels, the overall, the market is bullish or bearish, who's in control, is it bulls or the bears, what the market is trying to do, because hey guys, you can't go against the market. So this is very important. For example, the market, for example, it's trying to promote something, right? You have a president or you have some policies coming in which are promoting EV, for example, or AI, right? And then you're just trying to go against the trend because you're thinking, hey, you know what, you're just led to believe, hey, it's a bubble or whatever, and then you're gonna miss out. You're gonna get into wrong trades. So it's very important for you to understand what the market is trying to do. Because if you go against the market trend, you're just setting yourself up for trouble, right? So before entering any trade, just make sure that you identify the market trend. If you're not able to get a confirmation, guys, try to zoom out. Go to like a higher time frame. That always helps. They say when in doubt, zoom out, right? When in doubt, zoom out. For example, Bitcoin. What is Bitcoin doing? Bitcoin is going up, going down, going up, going down. It goes up 200%, then it comes down 70%. It's a wild ride. But if you zoom out and look at the last 5 years, 1 year, 2 years, 3 years, 4 years, 5 years, 10 years, what are you gonna see? It's an uptrend. It's an uptrend, right? It's an uptrend. The previous resistant levels are becoming new support levels. So it's just showing that Bitcoin is in an uptrend. But obviously, when you go to a shorter time frame, you got to see what is it doing in the last month? What is it doing in the last week? What is it doing in the last day? What is it doing in the last 4 hours? Once you look at that, and then with experience, once you keep doing it every trade, you'll understand how to read the trends, and basically how to trade the trends. That's what you need to learn, right? So that's very important that you do that, right? And then it's always good to mark key support and resistance levels. As I said before, when a stock usually goes up, or when it's running up, and then when it's coming back down, the previous resistance which it was trying to break, guys, it's like a rubber band, right? You have a rubber band, right? You have a band, you're gonna stretch it. So the further you stretch it and then you leave it, the more you stretch it back, the more power it has, and it can blow through the resistance. And then once it goes up, the resistance is going to become the new support level, right? It's going to become a support line. So if you open the chart, you're going to see that. So what you want to do is you want to see how high a thing can go, what kind of catalyst is there, right? If it's a strong enough catalyst that it can break through the next resistance level, right? So you got to look at the market. You got to avoid tickers which have volatility spikes, right? You have a lot of news tickers or momentum plays which are just like, there's no real fundamentals behind it, but you're still trying to trade it because, let's say a news came out that, hey, you know what, this company, they got an FDA approval, whatever, a big pharma company or a small pharma, whatever, they got pharmaceutical company, they got an approval from FDA, stage 1, stage 2, whatever, and then you just go like, all right, you wake up and you see it ran up like 200%. Now you wanna be very cautious, because if you don't wanna get caught in the middle, because these type of tickers, they are very risky. They can get dumped really fast, because a lot of traders, when they look at the news, they jump in, like the short-term day traders. And another thing that can happen is, for example, you buy a ticker and it was $5 and now it ran up all the way to like $10 on some news. And you say, all right, man, you look at the charts, it's looking good. You see, all right, man, it's an uptrend. The RSI is oversold, everything is strong. You just, boom, you enter on a pullback. The next thing you know, it gets halted. You're not able to trade it, right? Because there's so much volume coming in that it just gets halted. And once it gets halted, now you're just stuck, right? And if it goes down, you're just gonna end up losing money. So guys, it's very important that you understand the bigger picture before entering any trade. It can be short term, long term, even if it's long term, you know, medium to long term. You got to understand where to get in, right? You don't want to get in and then it's coming down. You don't want to catch a falling knife. So you have to look at the resistance levels, where you want to buy, where you want to set your limit buy orders, where you want to set your stop losses, if you set any, right? Or where you want to average down. You got to be very strategic with that, right? Guys, I really appreciate you guys tuning in. I will be sharing more of my experience. I'm new to YouTube, right? But I have a lot to share. I'm still trying to get a hang of it, you know, how to get everything that I have into you know, just out there so you guys can benefit from it, right? So like the video, subscribe to our channel, and I will see you all next time, guys. Thank you for watching.